Welcome to Tradiers, the Trader's Edge. I am Iuorio. That's Bob Iaccino. And I'm trying to I just watched a video of us opening a show. I can't remember which one of our pods it was. And I sounded like I was half asleep. So now I'm trying to drink more
caffeine and say,
now. Hey, welcome to the Trader's Edge. I am Iuorio. That's Bob Iaccino. Thank you guys for joining us. Bobby, how are you today?
I'm good. How are you, buddy?
Good. So the stock market got absolutely caned today. 2% in the S&P. More than that in the NASDAQ. My trade was that if it broke through the lows of last week, because of that outside bar, I was going to sell it, and I did. I'm mostly out of that trade, still a little bit short. Do you think this down move has legs?
I do, for a couple of reasons. Now, I don't think it's going to be a straight down move. As you know, and as you are as well, technical first, right? Come up with a fundamental thesis and then look at the charts. The NASDAQ was kind of trying to recover from that sort of 5 out of 7 day drop that it had starting after it made the high on July 11th, right? Kind of came down and then it had about a day and a half, 2 days where it was trying to rebound from there. And today was actually the breakdown, got below the 50 and broke down hard. Now it'll likely go sideways and rally back. And then we'll see if it fails from those levels. If it fails from those levels, that's the big move. So if you look, for example, at Mike Arnold's rotation zone, it's just forming negative. So there's no trade there for me yet.
Right.
Okay, none at all. But when you look at what's going on with the PMI data that came out today, I'm not going to say his name, but the chief economist at Bloomberg, I'm not saying it because I don't remember it. He said today, he goes, well, manufacturing PMI in the U.S. went back into contraction territory, but we're a services economy, and that actually came in better. So it's still good because we're a services economy. Manufacturing PMI specifically leads the business cycle, and the business cycle leads stocks. So if manufacturing is going lower, I'm not saying it is, but if it is, and you saw Philly PMI, you saw Richmond, both awful, right? Yep. If those are heading lower and PMIs start heading lower, the business cycle is turning and stocks are heading lower.
That's what I think too. So anyway, you guys watch the show for a long time, and we appreciate that, by the way, too. You know what I always say at this point in time, too? You can watch this show and you can say to yourself, Bobby and Jimmy don't know what the hell they're talking about, but you cannot say that we don't have great connections within the financial world, and we do get great guests, and we are not going to disappoint today. So without further ado, we're going to bring in Tony Nash, who is the president, CEO of Complete Intelligence, an AI expert and an expert on a lot of things and an all-around good guy. Tony, was my intro at the beginning too much with the welcome to the Trader's Edge? Or do you think that works?
We do a weekly podcast as well, and I have to psych myself up because some of these guys take so much caffeine before they get started that you just you want to be you just have to figure out where you are.
Right.
If you start out kind of pretty even toned, you won't keep people past the first 20 seconds.
Yeah, that's just the way it is. I mean, and this is important stuff we like to talk about, but you have to keep people engaged. And one of the things people watch us for is because we talk about valuable stuff. Bobby joked in the rundown that occasionally we have something of value, but it's got to be fun too, or else people are just going to turn the channel. Right.
Exactly. So it's hard to get thought-provoking. It's hard to get fun. It's hard to get relevant. To balance those three out, you guys do that incredibly well. I've been watching your show for a long time. You do that incredibly well.
I appreciate that very much.
Real quick, guys, if you can walk and chew gum at the same time, retweet what I just sent out so we can get a few more live people to ask you some questions.
Absolutely. Okay, Tony. So the rotation appears to be on. Okay.
Yep.
The rotation out of the AI names. So of course we're going to hit you with the AI names to begin with. We got a lot of stuff we want to talk about with you. But my contention is that even if it was a dollar for dollar in rotation, just the disruption is going to affect the broad market rather negatively. And I think that's what's happening now. Do you spot any flaws with that thesis? Not actually even saying do you agree or not agree, but it seems reasonable, correct?
I don't. Look, and as that rotation happened, you're actually trading down in terms of valuation. You're taking these AI companies have really stretched valuations, and you're turning them into to manufacturing or traditional services companies that have lower valuations, right? So you're kind of getting more tangible stuff as you sell off this really stretched stuff. We've seen sell off in something like CrowdStrike this week, which had a 580 times earnings valuation.
Jesus.
Now it's like 480, something like that, which still is crazy, right? But the people who sold that off, now that's event based, not necessarily earnings based, but still, those guys are trading something that has a lot of hope into it with something that probably has something more tangible.
So if the broader market, Tony, goes down, and I know you're not a trade by trade person, so I am talking about 3 to 5 years. My take on AI, number one, has been that while everything was stretched, I thought you should go into sort of the things that surround the actual chips, like ASML and ARM, and those people who kind of make the equipment needed. ASML builds the machines that build chips, right? So I thought that was a good way to play it. Now everything is falling today. Is this an opportunity to actually get back in the stocks that matter? Or do you think you got to wait till the overall market kind of calms down and chips lead us back up? Or do you not have an opinion on that at all?
Personally, I would just take a breath, because we've seen things move so sharply here that if you really want to jump in and take a chance on it, go for it. But for me, I'm seeing some of these things really come into something that's a little bit more reasonable. Is it reasonable? A lot of these things aren't yet, but they're more reasonable, right? And so, what we've seen within the tech space, the AI space, is a lot of assumptions that company A will never have competition. Therefore, you have a valuation that assumes they have no competition for 30 years or something like that, or 60 years or 500 years, right? But in tech, there's always competition, and it comes very fast. And so those investors have, they got in, they made a ton of money, and it's not money until you sell it, right? And so you have to assume that competition or that place in the market is not safe, especially in tech. So why do you think we saw all these guys, Elon Musk and Zuckerberg and all these guys, go out a year ago or so and say they want AI regulation? They want that because they want to build a regulatory moat around their business. They do not want competition. And so if there's regulation, they'll have their place in the market solidified. But the longer the government can resist AI regulation, the more competition will come into that space, and we'll see those valuations come down.
So I had a quick add on to that too. So a lot of people don't realize, who are just new to the business world, that the big companies always argue for more regulation because they don't want the little companies coming in and stepping on their toes. So this is nothing unusual at all too. Bobby, I know you had another question. I just wanted
No, that's okay. Go ahead, Jimmy.
No, because my question was this, is when you talking about the regulatory framework in AI, is there a political party? Because I don't know if you've read in the newspaper, I don't think it's buried on page 3, but there is an election coming up in November.
I've heard something about this. Yeah.
You heard something about it. Okay, good.
I've heard about it. Yeah.
And the question is there a candidate or a political party? Again, we're not political. We talk about policy. Whose policies favor AI in terms of more regulation, less regulation, however you want to answer the question?
I think unless there's an outline of an executive order saying they will not allow certain regulation, I think Congress has been so captured by people on either side or both sides that we are going to see some form of regulation. So on some level, I don't know that it really matters what the presidential candidates themselves say. It's really what the people in Congress say and who they're captured by. So, and you also get like the Texas legislation that wants, less, they want more say on energy. And you have the California delegation that wants more say on tech, and, these sorts of things, right? And so these guys trade off and they get a level of regulation that allows someone's son-in-law to get an internship somewhere or more.
How dare you suggest that there's this under the table dealing in our
right? Exactly.
This podcast is over.
Right. So, but it's both parties, right? It's not no one is innocent here, right? Everyone has some sort of capture, everyone has some sort of benefit, and it's an open secret, and we see it every day, right? So there will be regulation on this stuff. The question is, how quickly does it come, and how intense is that regulation? And for AI regulation, what we heard from the beginning and what we'll continue to hear is this is for your safety. This is for security, and this is for your safety. And I think we have to be very careful when we hear people in the tech and the AI world say, this is for your safety. It's dangerous. I mean, we have software to manage your identity. We have software to manage your security. We have software to manage all sorts of things. Is Skynet in the making? No. I don't care how many AI podcasts come out and tell you that Skynet is right around the corner. It's not in the making right now. It's not around the corner. And it's going to be years before we see that. So there are a lot of people out pumping podcasts and pumping AI newsletters and pumping academic papers and other things. But that stuff is just not coming in the next 5-10 years. You're going to see some cool stuff, but people can't even figure out how to use ChatGPT effectively. So we're not going to see things more advanced than that in the broad market.
Do you think there's a problem with people and their sort of perception of these things more so? I mean, obviously, a lot of people they blindly think, yes, I want regulation too, because they think, as you mentioned, dangerous, right? That's going to be, we're worried about your safety, which, brings me to the old Ronald Reagan quote, right? We all know what that quote is about the government trying to help. Yeah. But I specifically have an issue with the TikTok ban, right? Or the forced sale of TikTok. I don't agree with that kind of legislation, but I hate TikTok. Like, I hate most of this social media stuff, to be honest.
Yeah, but I mean, I hate Instagram as much as I hate TikTok. Right?
Same. Like I said.
I get people send me links to Instagram for me to look at, and I can't take it. I don't know how anybody subscribes to Instagram. That's just my little personal thing. But
okay, so my question goes to the AI regulatory part. Is there any room for regulation, or is it all just bad? Because Jim and I both were just like, look, just stay out of it. We'll figure it out.
Well, yes and no. I think part of the problem with TikTok specifically, like you, I am against the TikTok ban. Okay. Yeah. But what I am also against is the Chinese government harvesting user details from TikTok and the Chinese government imposing their will on the behavior algorithms in TikTok, both of which happen. So those things should be out in the open. Those things should be exposed. And those things, I have no issue with Congress saying, if you want to compete in the US, those things can't be a part of TikTok. You don't have to sell, but we're going to get very involved in your business if those things continue happening. I have no issue with that. Okay. But in terms of saying, hey, you have to sell TikTok, I don't think that's fair, because what if China goes to Coca-Cola and says, hey, man, you've got to sell Chinese Coca-Cola. You can't do that anymore. You've got to sell Chinese Microsoft. You can't do that anymore. Right. Then they own all of the IP associated with that. So it's, taking this from the TikTok side of it, how can you force a sale of TikTok to somebody else when you have all of your IP loaded in there? That's not fair. No. That's actually very un-American.
Well, so was freezing up Russia from the SWIFT payment system, freezing dollar-denominated assets.
I'm with you. Yes,
yeah, we've been a little heavy-handed over the
easing Russian central bank assets. I'm sorry, but that's sovereign money. I'm sorry, we just don't do that.
There's no doubt we don't do it, and it can backfire on us hard. We have grown so comfortable being the arbiter of the world's trade, and we made mistakes, and that's one of the reasons that. And again, I've heard you talk about China and the laughable concept of them having the reserve currency. It's not there, and it's not ready yet. You still think that, right? I heard you talk about it once about a year ago.
No, I still think that. So, to trust a currency, you have to trust their central bank, right? Because the currency regulates the amount of fund tickets that are in circulation that you spend. And, if there's no transparency of the central bank, then there's no institutional credibility. And so the PBOC, if you watch their activity, I've said this for years and it still holds true. The PBOC, the People's Bank of China, literally runs monetary policy through numerology. Okay. You have to watch their moves, and you have to watch how they move. They'll move it up 0.08 bips or something like that, right? Or down.
Because they think between numerology, you mean they think some numbers are luckier than other numbers?
Absolutely. Yes, absolutely. Yeah. So imagine if the Fed, thought that some number was unlucky and they wouldn't touch that number, or they thought if the way you move something, it worked or it didn't work. These are people who swear off religion because they're atheist communists, but they do their monetary policy at least partly through numerology. It's just ridiculous. So that on its own is a reason to question CNY, right? But if you just look this week, and I run in addition to Complete Intelligence, I run a geopolitics blog called Cloak and Dagger. We did a piece today on Russian banks in Russia cannot get their hands on CNY. So it's over the last 2 years, Chinese yuan has become the largest cross-traded currency between Russia and China, but they can't get enough CNY to trade in Russia. So there's a restriction of that currency in Russia. And so it's really messing things up. They can't have dollars, they can't have CNY, they're having to transact in rubles and they don't necessarily want to. So unless that currency is freely available, and what we don't understand, or what a lot of people don't understand, is a CNY is not an internationalized currency today. Just because it sits in people's central banks on swap lines does not mean it's internationalized, because it doesn't float. They don't have an open capital account. And so it's a controlled currency. So it is whatever the Chinese government says it is. And so you can't have a baseline currency with that type of regime control.
Bobby, just can I sneak one little thing in there? Because anyone was listening and didn't understand, CNY is the Chinese currency, the yuan, the renminbi, however the hell you say that word, it all means the same thing. I just wanted to make sure people listening understood that we were talking about the Chinese currency. Bob?
Yeah, so I want to go back a little bit to July 16th, Tony, and on X, which by the way is at Tony Nash Nerd. You guys should all follow him because he's a great
He's not a nerd. He's wrong.
What?
He's not a nerd. He's not a nerd at all.
He roasts his own coffee. He's a nerd.
Oh, he is a nerd then. Yeah.
So you had responded to, actually, I can't really tell who responded to what, but Nick Timorois. I don't know if I'm saying that right.
Timmy.
Yeah, he's also a good follow.
Smart guy.
He said, to be sure, the level of CPI rent series is still running below the level of the Zillow observed rent index, right? And Tony said, is it weird how CPI rent became massively manipulated at the start of 2021? Wonder what happened there. And then Nick asked you, do you think happened? And you said, well, data obviously began to be managed to look better than actual performance. My company has an AI platform that forecasts the largest set of market and economic data anywhere. These numbers don't just diverge all of a sudden. There is manual intervention to improve the results. These are not credible numbers. Shocking. I don't even want to say anything. I just want you to talk about that, especially.
I got to go get my wife's pearls because I'm going to clutch them.
Well, there's one more you said in there. Without question, we had unprecedented monetary and fiscal stimulus. There's absolutely no way the curve is as smooth as we've seen with the official CPI data. Not possible. Go.
Okay, I'll tell you the history of that. So, I started the company. I rolled out of The Economist. I rolled out of a company called IHS Market that is now owned by S&P. I led their global research business at The Economist. And so I always saw how economists manipulated data manually. I guarantee you guys, every single economics forecast that you see is manually changed by hand, by someone at the end of some crazy process, okay? So I started a company because I wanted to let the data speak for itself. And we started with economic and trade data, which trade data is the largest data set anywhere. I mean, you're talking, 195 countries. You're talking 10,000 lines within each country, bilateral trade for everyone. It's crazy. So we built this global trade and economic model. And I started to notice, and I knew this before, but the economic targets always changed. And so I thought, surely economic revisions can't be that big, maybe 5, maybe 10%. And so I went through, I think, the top 50 economies and looked at the macroeconomic data that they released. And, everywhere from Japan to Australia to Sweden to the US, the worst numbers are retail sales, CPI, unemployment. Consistently, those numbers have the largest revisions across every country, across every data set. Why? Because those are the ones that people watch, right? Consumer spending, all these kind of front of house, consumer driven numbers, unemployment, these sorts of things. Those are the ones that are the most manipulated. And they're manipulated because, and most people don't understand that most large countries change their data 3 or 4 times. So what you see in the news cycle on CNBC or Bloomberg or whatever, that is called the preliminary data release. It's not real. It's just kind of guys who kind of think that this is what's going to happen. Okay. Very political. It's increasingly political. Okay. Then there are 3 subsequent revisions for pretty much every data set. So when you hear an economist out there saying, we are the most accurate economic forecasting firm out there, we have a 98% accuracy rate. Okay. The question you should ask is, okay, which number are you accurate toward? Did you game the preliminary number? Did you just guess consensus and you're right? And that's why you're so accurate? Did you take your forecast and did you adjust it for the final revision of those data? Because again, sometimes those data can swing by 50 or even 70% in some cases. Okay. So economic data, except for the sentiment around the initial trading environment for that economic data, but you're talking about PMIs, right? Those aren't revised, but other trading, retail sales gets released, consumer spending gets released, GDP gets released. There's a trade, right? Boom. And there's a half-life to the sentiment of that. I don't know what it is, 30 seconds, 5 minutes, whatever, right? But people look at that for a period of time, market moves on that, and then people forget about it. You never or rarely hear about the revision of, Q1 GDP, the 3rd revision of Q1 GDP or whatever. Nobody cares, right? It's dead. It's not tradable. Nobody cares. That's history, right? So the industry of macroeconomics is just fluff. And so what we've done as a company, we moved from initially what we're doing into market clearing data. Okay. So we still forecast economics, and because that's valuable to people to understand the direction, but we forecast we forecast exchanges from Singapore to S&P to Australia to Germany to Korea and so on, individual stocks on those exchanges, plus currencies, plus commodities, plus debt, plus, all this other stuff. And so all is done in an AI platform. So I do not have experts in the tech sector or the energy sector or debt. All of this is gathered through artificial intelligence, validated, forecast, and uploaded. After hours on Friday, it's all gathered, processed, forecast, uploaded Sunday night. Monday morning, you come in, there's a brand new forecast for everything that we do every Monday morning. Okay. Just a plug. It's all for $25 a month too, right? So, this is how we're using AI.
Is $25 a month.
Yep. This is how we're using AI. So when you guys talk about, the value of AI, what's happening, the AI boom, that sort of thing, there's a lot of AI out there that is cool, but not useful. Our stuff is cool and useful, and it's cheap. Okay. The other thing that we do is, and again, just a very quick to help people understand what we do. Every company does a budget, an annual budget. Okay. And we work with companies. Our largest customer has $30 billion in revenue. Our smallest customer has $5 million in revenue. We will take data directly out of their general ledger. And every month when their accounting closes, we reforecast a 12-month budget for them. Okay. So companies never, ever have to do the budget cycle again. They never have to do the annual drama. They never have to have the fights. They never have to do the tension. We have a company that just onboarded about $1 billion in annual revenue. Their budget forecast year to date was 20% off, and that's normal. Okay, so this isn't bad. That's normal. Okay, our average error year to date is 1.3%.
Jesus.
Okay, wow. So for kind of the cost of a person or less, we're working with companies and basically doing every level of their budget on an automated basis on a level of accuracy that human beings just can't do. Okay. So that's a kind of AI that you hear about all this crazy stuff that people are doing, even LLMs. That's still pretty, science fiction-y. But what we're doing is very pragmatic, almost boring, but it's very tangible in terms of the value.
It's fascinating. By the way, my daughter's involved in budgeting. She's a finance professional at a company that owns tollways. I'm thinking about having her hooked up with you. See if you can assist her in that.
Love to help her
and launch her into the CFO suite at some point in time. Great. Because she will be the one who found you. I'm always trying to make a buck. Okay, so here, can I keep it on AI for a second? Because that is an obvious use of AI, how to increase productivity, which could end up losing white-collar jobs, obviously. But then I look at AI and its applications in writing. They're fine, but we don't need a ton of help in writing. It's going to make things a lot easier, making music, entertainment, drawing. I actually think that people are missing the point on those. Those are a communication between a person and what he's feeling and the people who are listening. I don't think that AI is ever going to be good. One thing AI can be great with, we as a species, and this is going to rub some people the wrong way, we are shitty drivers. You saw what happened. You saw what happened. I'm live on this podcast, well, the other podcast. My phone lights up with an emergency alert that my wife's car has just been wiped out like 3 weeks ago. So people are shitty drivers. But anyway, Tesla reports bad earnings. Was that yesterday? 2 days ago. Yesterday, I think. And it gets hit.
Last night.
Is Tesla an AI company? Is Tesla really going to launch driverless cars that are going to be readily available? And are they going to reach critical mass? What are your thoughts on this?
Yes. Like, I don't doubt Elon Musk brings great products to market, but I don't want a driverless car today. You guys can go first, right? All those early adopters who want to be the test subject, I'm really happy for them to go first, right? We see videos of people in China or in the US or whatever doing a driverless car and they hit something. And I don't want access to that technology so early that I want to, put my life in jeopardy, right? But other people do, and that's totally fine. And let them take on that liability. Let the technology learn. In 5 to 10 years, it's going to be amazing, right? Because you're right, people are terrible drivers.
Yeah.
And so,
right. I just bought her a new car, and then I'm thinking to myself, in 10 years, am I going to even be able to drive a car myself? And we buy Hondas to have them for 10 years. James Fishback when he was on the show said that already 2 billion driverless miles. Is that what he said, Bobby? Do you remember? Have been driven in this country?
Yeah.
Somewhere in there. Driverless miles. So the data's coming in, and I get what you're saying. We are control people, particularly people like us. And to surrender that control, I think is going to be terrifying. I agree with you on that.
If I could have a driverless internal combustion engine, I'd like that better, though.
Much better.
Well, actually, so here we get back into the conversation of regulations to a certain degree, right? I mean, it more scares me what the government could force upon the originators and the owners of AI technology than anything.
Particularly in driving, transportation is a big deal.
Particularly in driving. I mean, we've already seen, the situation in China where they have the digital currencies or sort of that face app, right? Where you pay directly on vending machines with that face app and they can turn it off on you. And they've done it to some tourists who haven't had an actual account in China that they can track. They haven't been able to spend money on food, right? We've seen those videos.
Yep.
So I guess that's what brings me to the AI regulatory conversation. And if there's a regulatory conversation, if it actually goes that way, the government clearly isn't going to regulate in any way that restricts their power, right? It's just simply not going to happen.
Mm-mm.
So is there a safety valve somewhere in there, or is this just something we're going to have to work out? Because I sort of use driverless tools now. Like we have 2 cars, one of which has the lane guidance, distance guidance,
which is creepy, I think,
and cruise control, right?
I don't like it.
Well, I literally love
the lane
I
guidance.
love sitting behind the wheel going like this. and just kind of waiting. And the funny thing about it is, after about, I don't know how long it is, but let's just say for the sake of the conversation, it's 30 seconds. After about 30 seconds, it starts beeping and says, "This won't be available. Please grab the wheel." And I always thought to myself, what a stupid way to resolve this. Because what if I had a heart attack, or what if I fell asleep? Like, these car companies should be slowing the car to a stop if you don't grab the wheel. Not just, and I've gone through it. I said, well, I'm going to straightaway. Let me see what happens. All of a sudden it says no longer available, but the cruise control keeps going. And
So you're still going 80.
Yeah, that's weird.
Car in front of me. Anyway, so the regulatory question again. And the reason I'm asking this is because Elon Musk said today, if you're not interested in autonomous driving, sell the stock. He said, because that's where we're going. Yeah, and people did. People did pretty aggressively. So, again, is there a sort of a safety net that's going to be put in against the government at some point? Or is the only way to do it just to not have regulations, in your view?
Is there a safety net? I think the safety net is, without getting too philosophical, I think the safety net is elections, right? And we had this Chevron decision last month in the U.S. that basically said the regulatory state cannot be the final arbiter of laws, right? So you have the EPA, you have the NHTSA, the Transportation Safety Agency, these guys who can effectively, before the repeal of the Chevron doctrine, they could make almost whatever regulations they wanted and claim expertise, Chevron. Since Chevron's been repealed, that actually puts the requirement back on legislators. So, the kind of the caricature in the US, for anybody watching outside of the US, is that people in Congress are dumb as rocks. Most of them are. And, they're dumb as rocks because they don't have to know anything. Because the regulatory state will make up regulations and enforce those regulations based on really broad laws that they make. So they can make a broad law about AI safety. It can be 1,500 pages that's all, filled with whatever, but not all that specific about regulations. And then just turn it over to the regulatory state and say, okay, figure it out. But because the Chevron doctrine has been repealed, they can't do that anymore. Until the next time, right? Because at some point it's going to come to the Supreme Court again, and they're going to say, yeah, maybe these guys are experts. But we're going to have to see legislators come in who aren't dumb as rocks and who are going to have to understand what they're legislating, whether it's AI, whether it's financial services, whatever it is. They're going to have to understand that stuff more than they have in the past. So I don't care what side of the aisle you're on. My congressman's dumb as a rock.
All of them are, yeah.
I'll bet everyone's congressperson is dumb as a rock. There are a few that aren't.
I like Byron Donalds, but go ahead.
Right. There are a few of them, but most of them are.
Agreed.
So we're going to have legislators that are more involved in legislation, that are not perfect subject matter experts on everything, but better experts on a lot of things. And they're going to have to be accountable for the things that they legislate. So is there a way back? I think repeal of Chevron gave us a path back, right? And so in terms of regulation, whether it's AI regulation or driving regulation or whatever, the extreme of that, the whole safety thing is, well, let's make the speed limit everywhere 30 miles an hour, because fewer accidents happen at 30 miles an hour, right? You can't get anywhere. It takes you 2 hours to get home or 3 days to drive to LA or whatever, right? But it's 30 miles an hour and everyone's safer, right? And that's ridiculous. But then you go up from there. Do you either go from completely open market with no regulation and put little pieces of regulation in, or do you go bottom up and say, okay, we're going to start at 30 miles an hour, and then we're going to give you little bits of freedoms, one at a time. The American way is to go top down and put little bits of regulation in place, not start at 30 miles an hour, right? That's how I hope they do AI. That's how I hope they do technology, because you have a bunch of people, and there's this sociologist or historian with the WEF, some Spanish guy or whatever, who keeps talking about how we need AI regulation. I don't even know who he is. He's some philosopher or whatever, talking about how robots are going to kill us all or whatever. I mean, this guy's a complete idiot, doesn't know how to program his name in Python, has no idea what a computer is, and he keeps talking about how we need aggressive AI regulation. And when we have amateurs like that talking about things like AI regulation to stir up fear, it's really not useful for anybody. But then when you get the other extreme, Elon Musk is an extremely smart guy. But when he's pushing for AI regulation, you have to ask yourself why. Why is he pushing for that? He's extremely smart. He knows all the details. Why is he pushing for that? So in the middle, there has to be something. There has to be a middle ground where people figure out what's reasonable in terms of safety and what's reasonable in terms of capability.
Yeah, I'm not even for speed limits because I have a really fast car.
I live in Texas. You get west of San Antonio, you can drive anything you want. Between San Antonio and El Paso, just go.
Back to data, if I could.
Yes.
So we mentioned this, actually, we record a little thing called the rundown before we do the show. And Jim and I were talking about how it's not really important what we think. It's more important what how the market is going to react to what, let's say, for example, the Fed thinks, or what the general market thinks of economic data. So I think the three of us agree a lot of the economic data we get from the Bureau of Economic Research or from the BLS or anyone else. PCE is another example, comes from the Department of Commerce, right?
Right.
From the Bureau of Economic Analysis. I call it research. But our jobs as strategists is to use what we have in front of us. So for years, I used to tell people, look, I got a friend at China Construction Bank. He's not there anymore, so I don't mind saying that he was there, who the Chinese data would come out and he'd call me up and he'd go, that's hilarious. Like, he was like, what a joke that is. But we still had to react to it. So what you do in terms of like economic data, where's the application for somebody like me and Jim, where we say, that's great that you know the real data, but what do we do with it?
It's interesting. Just taking your China story, in 2009, I was in Shanghai sitting with a Wall Street Journal editor, Chinese national, and we were having a coffee. And he said, look around. He said, if you look at all the economic data, you would think China's in chaos. But look around. Everyone's happy. It's peaceful here. But what you're hearing out of the West, especially about Chinese economic data, is that it's chaos, and it's just not, right? So it's observably false. And I think what we have to, the perspective we have to take when we put our economics hats on is we have to walk around. We have to look, are our friends losing their jobs? Are people keeping their cars for longer? Are there more houses for sale on my street? Does the mall in or not mall, but wherever you shop, is there more trash on the sidewalk? These sorts of things, right? You have to observe this stuff. Are there more help wanted signs? Are there no help wanted signs? Are companies shops closing? These are the type of observable things that you have to look around to kind of validate what you're seeing out of economic data. I don't trust economic data. To me, it's a sentiment indicator. It's economic data to me, regardless of the government that's putting it out, China, US, Australia, I don't care. It's telling me what the government believes they can get away with telling you. Okay. So CPI data, what does BEA believe that they can get away with telling you in terms of CPI?
That makes sense. That makes sense.
So,
and again, people we're just realists. I mean, we understand in the past, before we knew this, we thought there was checks and balances and people from different political persuasions checking the numbers, but that doesn't exist. I didn't mean to cut you off when
you have economists who were trained 30 years ago, and they haven't updated their methodology in that time. I mean, these guys are using SPSS and ancient software to do their statistical forecasts. They're not even using Python. They're not even using anything modern in what they're doing. They're using archaic economic theory. They're using archaic data gathering. They're dialing landlines. They expect paper submissions of things, these sorts of things. I mean, they're operating like it's 1986, and it's just not realistic. So what it comes down to at the end of that process is you've got some guy who's probably in his 50s, some guy or girl who's in his 50s or early 60s, who looks at the data and says, do I believe it? I'm going to change it a little bit. That's literally how I believe it happens, because I've seen it happen that way.
So,
Okay.
so my question then to you and to Bobby then is, so I trade short-term interest rates, and if I think that they're overstating the data, which I do, then you put the trade on. This has been going on for a year, and then you lose the money in the trade. So what is the tradable takeaway, or is there?
You have to have a real market proxy. You look at CPI and then you go, how much is a hamburger at McDonald's compared to a year ago? Right? I mean, something like that. I mean, people are not stupid. They look at CPI and they go, that's not real. That's not what I see in my life.
We've seen a lot of that lately.
Right.
I mean, a lot of that. What might be one of the only good things that has come, in my view, it's come out of social media over the last 5 years or so, have been people saying, how can they say inflation is down? It's obviously not. I can't even pay my bills.
Right.
So I guess I'm looking at it like, I knew a trader years ago. I was at a hedge fund years ago, and the smartest guy at the hedge fund, we'll call him Neil. That was his name. But he was actually he blew his part of the fund up. He was 100% right. He was just early. He was 100% right on what he was the character from The Big Short without the longevity, without the staying power. It wasn't necessarily in mortgages. It was in Japanese yen. But I always thought he's one of the smartest market guys I ever met. He was so smart that he was ahead of the market. So if you end up saying, I don't have the right data, my thought is, and I want both your comments on this data is wrong. This data is right. The right data is persisting. So what's going to be the downstream effects when they can't lie about it anymore and invest based off of that? Does that make sense for medium to long-term investing to you guys?
I have an answer for that, but I'll let Tony go first.
No, go for it. I want to hear it.
Here's what I then truly believe. And you said, by the way, people our age sometimes take that little shot at social media that you took, like saying one of the only good things about social media, because I contend that there's a lot of good things about social media, but you can plug in and start to feel the level of belief in market participants. And we saw that waning in the labor data over the last couple of releases. And then we got confirmation of that from the chairman, who said he believes there's some factors that might be overstating jobs created or whatever he said. I might be misinterpreting it. But then as the trader, you have to be like, oh shit, they really are going to ease this year. And then you institute the trade. And by doing that, you would have made money. But you have to look around the room and see who's listening and see who's rolling their eyes. That's my opinion on that.
You're absolutely right. I live in data every day. I see data every day. And I don't come from a trading background. I come from a nerdy data background and economics background. So I see the data and what's that?
It's got to be frustrating for you.
Oh man, it is. I honestly, I wish I was a better trader, and I wish I had the background and training that you guys have.
I wish I was a better trader too, but anyway, go on.
But I see the data, and my mind tells me, oh, this data is happening, therefore that's going to happen. For me, what you said, Jim, is you have to look around the room and see who gets it and who doesn't. And a lot of times I see the data, but it takes months for the people around me to see it. And that trade really only, takes place when those other people see it, right? So I can believe that, the phantom jobs part of the BLS data is real. It's really phantom jobs. It's not real jobs. And I can see that for years. Mike Green's talked about that for years, that it's just statistical jobs. It's not real jobs. And so, but can that impact my trading or my, market commentary or whatever? It can't unless other people believe it too. So, this is why I take economic data as a potentially directional sentiment indicator. I'm sorry to qualify it that way, but
no, I think that's great.
Potentially directional sentiment indicator. And you always have to have a market clearing proxy for the macroeconomic indicator you're looking at.
I'm going to go ahead and announce right here publicly that I'm going to start subscribing, because I want to be the smartest person in the room with my friends. And I want to be able to say to them, no, this is what the data looks like. I don't care what they said. Because the Paul Krugmans of the world drive me crazy, where they basically write articles that say things like, people feel bad about the economy because they don't understand the data, as opposed to their life experience isn't what's in the data.
Right.
Which is
They're too dumb to
completely
understand that their paycheck doesn't go as far as it used to. Look,
Yeah,
whenever
before you go, there's a comment I want to read, and then please run
Okay.
with what you were going to say. From Wisdom A, he says, where they pull like 500 people and say all America wants this or that.
Yeah.
It's all faked data.
Amen.
So that's basically what everybody thinks. Go ahead, Tony.
They bias it in one way or another. The Krugman
Krugmans?
stuff. So, I read Krugman's book in grad school. The guy was a great economist. He really was. He taught thousands of people how to be really good economists. At some point, he became a politician and a journalist, and he forgot how to be an
We talked about
economist.
this before.
And so, I have respect for the Paul Krugman that was. Unfortunately, and you guys know this from looking at markets, you can't have your politics color how you see the market data, right? The market data is the market data. You can't have your politics color how you see the economic data. You have to take it for what it is. If that's your truth, if CPI or whatever is your truth, then you can't let your politics color that. I see that on social media every day where people, look at the market data and put it through their political lens, and it doesn't make sense. Like, would I put the price of Apple through a market lens? I wouldn't. I would through a political lens. It doesn't make any sense.
That's why I think that traders should go into Congress for a couple of reasons. One, most traders I know, their needle starts at zero. It has to. And then the information as it comes pushes it one way or the other. They have less bias than most people, but certainly bias. Two, I'd love to give a speech in Congress like what we said before and just said, I'm here because you guys are all a bunch of idiots, but good news, I'm here to help. So no thanks is necessary. It's just my civic duty. I think that'd be a shit ton of fun. Would you guys donate to my campaign?
Yes.
Yes. I'm in.
Okay, good. Bobby?
Yeah, I want to ask you about one more thing.
Oh, we forgot about the tariffs so far, Bobby. Remember that? I wanted
to
Yeah, go ahead. I just want to ask you about you did a nice thread on the tariffs. I retweeted it. I believe Jim did as well. So you can find it in Tony's Twitter, which again is at Tony Nash Nerd, or mine or Jim's, about the tariffs and what is expected or what the media is portraying and what actually happens with tariffs. Can you just go ahead and sort of explain that thread?
Yeah. Do you mind if I share my screen so I can show people what I tweeted?
Actually, I don't think you can, but Matt, let's see who's in the back. I think in the back today we've got a guy named Nash in the studio today.
Really?
Tony Nash. Hey Nash, can you comment? He says yes, have him share. So go ahead and share your screen, and Nash is going to put it up for Tony Nash.
Oh wow. Okay, I can do this.
Yeah.
This is high-tech shit. This is more your arena than ours, Tony.
Yeah. Okay, can you guys see this?
We can't, but he's going to permission it, and then we'll be able to see
Okay,
it.
great.
There it is.
Oh, good.
So this is just a screenshot of my tweet talking about the impact of tariffs. And I was doing an interview 2 nights ago to a radio show in Hong Kong, and there was a guy in there saying that Trump's going to impose these tariffs. It's going to be the worst thing for the U.S. and the world and all this other stuff. The person obviously has no idea how trade works. I started my career as a freight forwarder and customs broker. And in grad school, I did a lot of work on trade economics. And then in the early days of Complete Intelligence, we built the largest trade forecasting model I've ever heard of. So we know a lot about trade. Now, when you look at this chart, here's what it's telling you. When the Section 232 tariffs went in, this is looking at steel, okay? There was a bump in the cost of steel because those tariffs were just put in, okay? By the time we get, say, 10 months into it, or not even 10 months, 6 months into it, that bump starts to decline. And within a year, it's back at the normal gap that you see. The orange line is the world price of steel, and the black line is the US import price of steel, okay? So within a year, you're back at that normal gap between those prices. What does that tell me? That tells me that the Chinese government, because they're the largest producer of steel by far, the Chinese government subsidized the price of steel. They subsidized those tariffs so that that cost could come back into balance for US consumers. Okay. This will happen with everything. Okay. So when you look at the price of aluminum, when you look at other things that happen under those tariffs, there's an initial bump where the market's trying to figure out what happens. And then it settles into the normal gap of world price to US price. And China is a command economy. So what happens is they have to subsidize their exporters in order to compete. Central command economies always end up exporting deflation because they overproduce, because they work on, you have to produce 1 billion of these things every year or whatever, because that's in their 5-year plan. So they overproduce, they have to export it. And if there's a tariff and those things are too expensive for the importing country, then the government, in this case China, will simply subsidize it to bring that price down to be kind of within expectations in the importing country. So I don't see that as a major issue going forward. I'm not a blind Trumpster. The guy does say some really interesting stuff. I do not think tariffs are the end of the world. Of course, that's within limits. You put a 50, 70% tariff on things, that really changes markets. But you put a 10, 15, 25% tariff on things, it doesn't have the earth-shattering effect that people say. And most of the economists saying this are guys who are, learned their trade economics in the 1980s, all supply-siders, and they don't understand modern trade theory.
So what I want to follow up with, and we're running out of time, and I want to give the last question to Jimmy, but what I want to follow up with then is Trump crazy? Because when they talk about Trump lies, okay, Bloomberg Business Week did a really good interview with President Trump, and they asked him questions and he answered, and it was completely unedited. It's a very difficult read because of the way he talks. I don't know if either one of you saw that, but literally I'm sidetracked here a little bit, but in the middle of talking about trade, he asked the guy if he wanted a Coke. And then he said, "You want a Coke? We have regular Coke. I never see a thin person drink Diet Coke. It's always heavy people drink Diet Coke. Thin people drink regular Coke. I don't know why people drink Diet Coke." They left all that in. So it's a very difficult read because of the way he talks. But wherever they fact checked him, they weren't lies. They were exaggerations. So he said, "I think that the electrification is going to cost they spent 1.2 trillion and they got 7 charging stations." And they correct him and said, "Well, it was really only 700 billion and they got 12 charging stations." Like, he just exaggerates for the most part rather than lies. So when he says we collected all kinds of money from tariffs as a government, and I'm asking, I don't know the answer to this, and steel prices were fine, is that accurate?
Okay, let me answer your first question. Is Trump crazy? Absolutely, because if he's running president 79 years old, he's insane.
He's nuts.
But is he right? Yeah, this Commerce Department report, and I put it in my thread on Twitter.
Yeah.
I put a link to it. They tell you the revenue that was raised. It was hundreds of billions of dollars. Okay, so did they raise all kinds of revenue? Yeah.
There was no prices specifically for steel is all you showed in that thread, right? So is it fair to say that it was in a lot of other things, or is that they're just saying steel?
In that same thread, I show aluminum. And so, there is at that disruptive point when the tariffs first go in. So that's confusion in the market. And so if now, just to tell you a war story, January of 2017, I was still doing a lot of work in China. I spoke at the largest international think tank in January of 2017, and I told them, "Look, here's Trump's platform. Here's exactly what he's going to do. Here's what you guys need to do to prepare," right? He's going to put these tariffs in. He's going to do this. He's going to do that. The guy was elected president. They still didn't believe me, and they still didn't make any changes or any preparation to him putting in tariffs. So when he put those tariffs in 2018, they were absolutely unprepared, absolutely unprepared. So I think this time, if he's elected, they'll take him at face value. They'll take preparations. They'll ratchet up the subsidies so that there's no disruption in their industry.
I'm also making it a point of Jim and ours to tell everyone that Project 2025 is not the Trump platform. Everybody should know that. Go on.
Nor is it all that radical, but it's not Trump's
No,
program.
but it's not Trump's platform. They keep saying,
Yeah.
just read his Project 2025. It's not his.
Not
it's the Heritage
his.
Foundation.
Kevin Roberts. We love Kevin Roberts. He's a
Love
friend of ours. Yeah, he's the one who did it. We're on the inside of this. We know who did it. We know who didn't do it. Yeah. Anyway, let's wrap it. Is that cool with you guys?
Yeah, I'm
Works
good
for
with it.
me.
So
Guys, thanks so much for the opportunity.
Oh, but the pleasure is completely ours. He's at Tony Nash Nerd on Twitter. The name of the company is Complete Intelligence. $25 a month seems like an absolute steal for this product. Again, you guys out there, thank you so much. None of this stuff works without the support you guys give us. Thank you so much. Please retweet, please DM, please keep in contact with us because we want to know what you like, what you don't like about the show. Remember what Bobby and I, why we're doing this. We were both in what we hate to call mainstream media, but we can't think of another substitute term for it. And they pressured us for opinions. Producers pressured us for trades that they didn't think were good. You couldn't say anything about the sponsors. These are terrible ways to do journalism. This is the right way to do it. Just us guys. Thank you for joining us on The Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.